Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 29th of September 2016, presented by myself, Phil Carr. So during today's session, we will be covering live market analysis. We will go over a watch list of trading opportunities, an overview of the commodity markets, portfolio performance. So we'll go through our top trades over the course of this week. And of course, we will be answering questions during the session as well. Now, we'll get straight into it because we've had some big moves over the last 24 hours, particularly on the crude oil market. We saw oil soar 6% yesterday as OPEC have now reached a deal to limit output. And with that, it's the first deal since 2008. And I thought what we could do is we could have a look at some pre-analysis that we've done of where oil was at the beginning of this week. We've been discussing it on last week's session as well. And then we'll have a look at where oil is now and where we expect it to move going forward as well. So with that, guys, any questions, any comments, do keep those coming into the chat. It's certainly been a busy day. There's been a lot of news items coming out today, and we just really want to break it down for you and focus a lot on oil here because, as you can imagine, at the Gold and Silver Club, we have been inundated regarding oil over the last 12 hours or so since the OPEC decision has come out. So with that, we'll start off here. And I've got a before and after chart. So let me just show you the current chart of oil. This is the current chart. Okay, so the 6% surge that we saw yesterday, and this is the before. So let me just take you back to the beginning of the week when we're putting out our forecast for where we expect oil prices to go. Now, there has been a lot of anticipation for the OPEC meeting this week, which has been going on from Monday through to Wednesday. And what we saw was the price was getting tighter and tighter. We formed into a pennant here. We were forming higher lows, but also lower highs, which is very typical right before a major news item. And what you look for is the price to get tighter into that apex at the edge of the pennant, and then we look for a breakout, and the catalyst for that is often a major news item. Now, we've been fortunate over the last week in that we've taken some tight entries prior to last week's FOMC statement when we had a revisit of the lower end of the trend channel, nice supportive zone, and we got quite an early position on here with oil where we were able to put ourselves in a position where the trade was risk-free. We were able to move our stop loss, so we'd actually secured points prior to the OPEC announcement. So we were guaranteed points in either way, but obviously we'd get more in terms of profits if the price was to continue to break out to the upside. So we've had a pennant formation over the course of this week. And ultimately, we were looking at two major outcomes following on from the OPEC meeting. So if we were to see a cut, which is exactly what we have seen, we've seen the first cut on oil outputs, the first deal since 2008. We were expecting a bullish move, a breakout to the upside, ultimately breaking above the pennant and making a move back towards 49 to the 50 zone on oil. And currently we're about 47.50 right now, and it's had a reasonable breakout. It's moved over 250 points since yesterday, 6% move in one day. On the flip side of that, if there was a failure to have any sort of agreement of that meeting, there was downside risk for a revisit of 43 US dollars a barrel, and then below that could even drop to $40. But we've seen the outcome of that has been that it's the first deal which has been reached since 2008. And with that, we saw a big breakout to the upside with oil yesterday. And now coming into the market now, if you don't have a position on oil, we're getting this question a lot. What can you look at? What are the next steps here that you could take advantage of with oil, given the news which has just come out? Okay, so I will bring it onto the chart. So just have a look at this quickly before. Okay, this is what we're looking before at the beginning of the week on Monday, and this is after. Okay, so you can see where we've surged now from the lower end of this trend channel. We've now moved over just shy of about 360, 370 points. It's been a 6% move here on oil. We've broken out very firmly above the pennant formation just yesterday. And we've had a strong close here. Oil, WTI, or light sweet crude oil, has had a strong close here. It's broken out of its resistance channel, and there is really clean air for oil to continue this move at the moment. We're only really getting started with the US session. Currently, oil is sitting at $47 and 35 cents a barrel. Now, I talked about this on a previous webinar that we did actually earlier on today, and I think it's noteworthy that when you get, so I just want you to just bear with me now. I'm just going to talk you through a formation on the chart. When you get a bullish candle like this, and this is one of the strongest one-day moves that we've seen on oil over 2016. There's been quite a few big moves to the upside like this, but you really want to watch out for the potential follow through of a candle like this. I can highlight a few to you, especially if it turns out to be a three white soldiers formation where you see 3 consecutive days of very strong gains. Now, at the moment, there's speculation that we're seeing profit taking this morning, that the deal might not be as concrete as originally anticipated. So we're seeing a little bit of indecision around this level at the moment, the highs of yesterday. Now, typically when you get a very strong candle like that on a daily chart, you want to then see the following day whether we will get some good follow through. I can see it's developing at the moment. Previous resistance level is becoming support. We found support, the 100-day moving average, a pivot here. Also, previous trend channel is providing support. What you want to see on a very strong candle like this is a retracement to no more than third of the upper end of that previous candle, okay, which is what we've got at the moment. You don't want to retrace more than that. If you start to see a 50% retracement, or in fact, if you start to see a retracement all the way back down to the low of the previous day, that's not good. It's known as a railroad, and you can see the price start to turn around, give back its gains. But if you only retrace within the top third of that candle, which is what we're seeing at the moment on oil, as long as we only retrace slightly, get some profit taking at that level, then you go for a break and you break back above the daily high, the previous day's high. That is where we start to see another day of follow through on this formation, okay? And then you would expect another strong day, and you could get another bullish day, bullish engulfing candle, or not a bullish engulfing candle, but certainly it'll be a bullish candle where you see the potential for a development of a 3 white soldiers formation. What does a 3 white soldiers formation look like? It looks like this: very strong candle, 3 in a row. You get this a lot on oil. You get a reversal, and then you get 3 days of very strong consecutive gains. And it's something to be noteworthy if we do really start to see momentum pick up in the oil markets. What we could get is, especially, we're only really getting going here. We're currently sitting at 47.42, which is more or less the highest it's been in since the start of the UK session this morning. So I'll be looking out for that, for the potential for oil to then follow through, break back above the previous day's high here, and as long as it only retraces to the top third of this, then we could really get going. And I'll be looking for a revisit then of, first of all, 48.40 is the next target zone that we've got. We've got oil positions which have been on since before last week's FOMC statement, so we're continuing to ride this trade. We've moved up our stop losses as well, so we're guaranteed profits, but this has worked out very well for us from our existing position point of view. And if we continue to see follow through here, we would then, beyond this level 48.40, I would look for a revisit then of the 49.40 zone, which was the high going back to August, where oil rallied 23%. And then beyond that, I'll be looking for a revisit of the 50 zone. So right now, it's looking good for oil. It's had a strong close yesterday, a 6% gain in one day. You might think, okay, isn't oil a bit overbought now? It's overdone. Well, we've just broken out this pennant. We've had a very strong close, the strongest close in over 3 weeks here. And if we do get some follow through today, we could really start to see momentum pick up to the upside, just from the fact that we've had so many inquiries over, really, since the OPEC decision yesterday, over the last 12 hours. We know there's a lot of traders looking at this at the moment, looking at this potential oil position right now. Not just oil, they're looking at stocks as well, oil stocks, which could benefit from this OPEC decision. Okay, so it is historic in that we haven't seen a decision like this, an agreement and a deal like this, since 2008. So we're watching this very carefully. So I want to put that on your radar. We've got positions on. Now we're just managing these trades. What could you look at for a fresh position here? Well, in terms of this current move right now, I would look for certainly potential to break above yesterday's high and follow through. Ideally, if you're looking for a fresh position, and certainly those of you who watch our weekly reports at the Gold and Silver Club, you'll know there's been an opportunity to get in on this breakout of the pennant formation. Once we've broken above the weekly highs here, this breakout trade so far, which is moving well. So ultimately, we're looking for follow through here at the moment with oil. Now, I don't think, if there's any other questions on oil, do put those into the chat, but I definitely just wanted to cover oil with you first. And again, for those of you just joining a little bit later on here, I'll just go back to the example. This is how oil looked at the beginning of the week prior to the OPEC decision. Okay, this is at the beginning of the week on Monday, where we were putting our forecast forward for what we expected to happen next. We were building a pennant formation. If you trade commodities, you need to be very aware of the formations which develop in the market. This is a classic formation before a major news item. So you get the market just gets tighter and tighter. It consolidates into a pennant, and then once the news is essentially broadcast, and once we get a decision, you then see a breakout of that pennant. And this time, because it's been a bullish news item here, we've essentially seen a breakout to the upside, hence a 6% move on oil in one day yesterday, this breakout to the upside. Okay, good. Right, so with that said, let's move it over to silver and also with gold. Silver and gold I find interesting because we've just had a number of US data items come out, including GDP, and gold and silver have hardly flinched. They've hardly flinched since where they were this morning. They were pulling back earlier on this morning, but we do have some major trend channels. You would have really expected on the back of that data earlier on today to see some sort of sell-off, larger sell-off on gold and silver, but they are holding on to key support right now. You can see the same situation that we've had on oil. Gold and silver, they're developed pennant formations. You've got higher lows, lower highs. You've actually on a much higher time frame, you've got the pennant, you've got the potential for a bull flag formation here and a breakout. What do I mean by that? A bull flag formation? Well, let me take you over to palladium. This is a bull flag formation, okay? So it's when I actually probably need a better chart to show you that. Hold on. Yeah, here we go. So this is a bull flag formation on palladium, and I can just show you some of the bull flags that we've had over the course of this year. This is where you've got a very strong upward trend. It takes a pause, typically could be a month, could be 6 weeks, and then it pulls back and then breaks above the resistance channel here. And palladium is really leading the metals at the moment. Gold and silver, they've come back for a bit of a pullback. Nothing too major at the moment. They're still holding underlying support. And I would just point out to you, it has the potential to form a bull flag. So we've had several of these over 2016. You see the bull flag formations on palladium back in February, a pullback which lasted about 2 weeks, then a breakout back above the high there, another pullback going back to March, which is then broken out, another pullback again, a bull flag formation going into May, which then resulted in a significant rally. And we're at the same point again. We're just coming out of a bull flag here for palladium. Palladium is actually leading on the commodities at the moment. It's one of the strongest alongside sugar right now. Let's just have a look what's leading today. So we've got, okay, let me just see if I can bring that up. Okay, palladium's leading today. So far we've got palladium, then corn, and we've got oil obviously as well, following on from yesterday's move. Yeah, palladium is the leader today amongst the commodities. What's sugar doing at the moment? We'll move over to sugar. Sugar actually broke out again to 4-year highs just earlier on this morning, got above the 24 zone. Sugar is now up 46% in 2016. We've seen some incredible moves on that market. But essentially, the metals right now, they are holding on to some key levels. So particularly if you trade gold and silver, which I know a lot of you do, I would watch out for this because there is quite a lot of underlying support at the lower end of this zone right now. We're coming back into our buy zones, a few indicators here. We're coming certainly into an oversold condition. So I would be looking at the potential for this pennant to hold and then break out to the upside, bull flag formation breakout. Now, that's not confirmed at the moment, but it doesn't take a lot for gold and silver to do that. And what we saw yesterday is we saw broad-based buying on commodities off the back of the OPEC decision. When we saw oil rally 6% in a day, we saw silver in particular close with a hammer into the close here. And if we continue to see momentum to the upside with crude oil, I would watch for the potential for it to just naturally bring up a lot of other commodities over the course of the US session today. So watch out for that. I do still see the potential for a good opportunity here on silver. It's got some work to do, but it is getting more into the apex of this pennant where I expect to break out soon. And really based off the data today, which has come out fairly strong so far from the US, gold and silver have hardly flinched so far, particularly silver. It's not really moved a lot. You would have expected a bigger pullback given that data. So just bear that in mind that there's a lot of support for this market right now. So let's just go over to gold now. If we have a look at gold, gold's pulled back. It's just come back to the lower end of the trend channel. This trend channel has been supportive going back to end of December this year, or end of December 2015, beginning of the year over January and February. Revisited that low in May when we had the worst non-farm payrolls in 6 years. Big breakout to the upside, and we've just come back for a retest, the lower end of the trend channel, retested the 1360 zone. 16 zone, so 1,316 US dollars per ounce, and we're still moving into the pennant. You can see here probably on lower time frames you've got some sort of rejection candle forming. Yeah, there you go. See, yep, you can see. Let's put it on the 1 hour. Yeah, 1 hour. We're finding support definitely at this pivot at the moment, lower end of the trend channel. Gold's getting bid back up, back into 1320. There you go. Hammer on the 4 hour chart. Clear trend channels developing. I would definitely watch out for gold here. It's not really breaking down as much as you would expect given the data that's come out of the US today, holding on to key support channel. Also, the more that we're squeezed into the end of this pennant, we should get a resolution soon. There's a lot of underlying support on gold at the 1300 zone. If we can get a breakout now, it's getting tighter and tighter. So I would look now for a breakout around the 1335 zone if we were to fully break out from this pennant formation. Watching the metals closely, you might argue at the moment that we've got lower highs at the moment, which we are developing at the moment on gold, but we're also in the short term, we are developing higher lows as well. The 100-day moving average has been very supportive. We are kind of channeling sideways. I would say this is a sideways moving market right now, but gold is still up 23% so far in this year. The overall trend on the larger timeframes is still on the bullish side with gold. It's entered into a bull market this year. The overall trend does favor breakouts to the upside when you have these pennant formations. I'll give you an example on sugar, case in point here. So sugar, which developed into a very tight pennant formation recently, strong underlying support. When it finally broke above its resistance, and I'll show you the pennant which developed on sugar recently. So we continued to see this market really get tight. It continued to consolidate for over 2 months. We developed into the pennant here, quite a strong move into the pennant. A lot of retests of the 50-day moving average. When it finally broke out to the upside, it's now moved 20% over the month of September. Sugar has moved 20% since it broke out of that pennant. But prior to that, over July, August, hardly did anything, just stayed range bound for ages. And this is what I would say is happening on gold, silver at the moment, is they're stuck within this range. Once they get going, and ideally I would like to see a breakout to the upside within the predominant trend at the moment. I think that's where you're on the same side of a lot of the managed money position at the moment. And if we were to see a breakout to the upside, I think that could really push gold and silver significantly higher. We might not get it, but if we do, I'll just put a few different commodities on your radar. And sugar is one of those, which is now up 46% this year. This is the runaway move we've had over the last 2 weeks, 20% move. We identified this trade setup with you all actually on a previous session. Number of times actually we talked about sugar, and that's been one of our best trades this year because we've still continued to hold positions as well, going all the way back to April here, which we've seen significant gains on. Now, moving it over, we'll see what else we can bring out onto the chart, which is worth discussing with you at the moment. Yeah, I would say palladium as well is moving quite well at the moment. It's broken out to the upside. It is leading the metals right now. So you can see we've got the potential for a revisit of the 745 zone, possibly over the month of October. We've broken out of this bull flag formation and it's starting to build up some good momentum here. So I would also keep palladium on the radar as well. Now, moving over to the grains as well, for those of you who might trade the grains market, there is a major announcement coming out tomorrow, which is a quarterly US grain stock report. And if I just bring you out to soybeans, we can have a look at that. We'll put it just on a daily chart. We'll just minimize some of the information on here. Just hold on, just make it a little bit more visible for you. Okay, so soybeans at the moment, I would keep an eye on this right now. So wheat recently broke down to 12-year lows. In fact, let me bring corn out because I've had a few questions on corn this week. Corn's probably better market to show you at the moment. This is corn on a monthly chart, okay? Corn recently broke down to 6-year lows. Wheat broke down to 12-year lows on oversupply, and soybeans pulled back to its lowest level since April this year. So at the moment, from a supply and demand perspective, corn in particular has seen the biggest harvest on record. So it's the biggest yield ever. And with that, we've seen a number of USDA reports from the US Department of Agriculture over the last couple of months here, which have continued to show there's a big oversupply in the market. With that, we have seen corn break down to 6-year lows, but it's at a major level of support here. It's been supported a number of times. 2002, this was major resistance. It's then become major support over 2007, 2008, 2009. And also more recently, we're at that very key level. So from a risk to reward perspective, you're looking at approximately about a 300-point stop loss to position your stop below this major swing low, which goes back 6 years. So from a risk to reward potential, it looks very interesting here at this point, particularly as we go into the quarterly grain stock report on Friday, which can be a major mover of the markets. And as you usually go into the final quarter of the year, this is where the bullish momentum tends to be in favor of a move to the upside over October, November, and December. From a seasonality point of view, as we transition past the harvest, this is often where we see some good upside. Now, more recently in America, which is one of the top producers of corn, we've seen a lot of heavy rains out there, and there's speculation that the harvest is actually not going to be as big as was originally anticipated, because a lot of the rains have caused a delay in harvest. They've also caused mold to set into some of the crops, some of the harvest. With that, the grain stock report, which will be released tomorrow, if there's a change in some of that data, could see some really explosive moves and some great opportunities on the grains as we enter into the last quarter of this year. So that is a major report that we are watching and keeping a lookout for at the Gold and Silver Club as well. So I do think there's some tremendous trading opportunities over the course of October as we go into October. OPEC, obviously, we just had a great opportunity from that 6% move, which we've capitalized on just yesterday on oil. We continue to hold that position. Sugar has been a runaway move. More recently, breaking out to 4-year highs, is up 46% so far this year. Gold and silver just consolidating, but I suspect they're going to have a reasonably large move now as we move into the final quarter of this year. Lots happening in the markets. We've got the US elections coming up. We've got non-farm payrolls, which is going to be next Friday. We've got US grain stock report, which is going to be tomorrow. We've got the minutes of the FOMC, European Central Bank, Bank of England next month as well, announcements. So we've got lots happening, and it couldn't be a better time, in my opinion, to be trading the financial markets right now, and especially trading commodities. Okay, so with that, what I will talk you through is the performance of our trades over the last week. So our trades have been as follows. So we've taken advantage of the Brent crude oil trade. Now, from a swing trade perspective, we have taken some of our position off the table, given the fact that we've had a windfall gain with oil gaining 6% yesterday. So we've banked one of our swing trades, 370 points profit, taking partial profits off that, letting the rest of the trade run with our stop loss secured now. So we guaranteed profits on that trade. Sugar as well has been a runaway move. We've now capitalized on a 420 point gain as we've seen sugar now break above the 24 level just today, which is 4-year highs. And gold last week, off the back of the FOMC statement, we caught a quick trade back up to resistance for 300 point gain. So with that, if you would like access to our trade setups at the Gold and Silver Club, our trade ideas shared with you, ready to implement for results, you can very simply make an application to the Gold and Silver Club. Just go to www.jointhegoldandsilverclub.com. Okay, complete the application form and we will get in touch with you ASAP. It's www.jointhegoldandsilverclub.com. Excellent. And with that, if you would like to find out a little bit more about the private members live trading room, who's it for, what does it involve? Well, essentially, it's for those, even if you're a new trader, you want to develop a solid understanding of the markets, fast track your results, or even if you're an experienced trader, but you just want to take your trading to that next level, particularly for trading commodities, the private members live trading room, it's definitely something for you to look into. We include in that, you get live trading room webinars where you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, pick out highly profitable trade setups, share exact entry, exit, profit, stop loss targets. The live trading room webinars will help you understand and implement the Gold and Silver Club live trading room setups for accuracy and precision, so you consistently achieve results. You get trade notifications via email and SMS, real-time trade notifications alerting you when to enter into positions, when to exit positions. Everything is updated in real time, and this is what it includes. So the following: so you get exclusive weekly live trading room webinars, live trade recommendations ready to implement, live trade notifications via email, SMS, so you don't miss profitable trades, weekly trading plan with a watch list of trade ideas for the week ahead, Master the Markets commodity trading course, and a monthly big picture commodity research report to give you the ultimate edge in the market. So again, guys, if you want to get in touch, you want to find out more, just go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, I will pass it back to Mauricio and Adinda. If there's any other questions, do feel free to put those into the chat. And again, guys, look forward to hear from those of you who will be making an application and joining us at the Gold and Silver Club. Good trading. Have a fantastic day. We'll speak to you real soon, okay? So with that, all the best, guys. Speak soon. Cheers. Take care. Bye-bye.